Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, we're going to be taking a look at Blue Sky Uranium. Now, apologies for not posting last week, I was kinda busy. But anyways, that's not too important. I also got this green screen to somewhat work, though it's not perfect since I do have a green chair, and it's not actually a green screen, it's a bunch of green poster papers taped together, so... But, you know, I was messing with the settings, I think got it good enough. But anyways, moving on with the video, Blue Sky Uranium trades with the ticker BSK on the Toronto Venture Stock Exchange or BKUCF on over-the-counter exchanges in the USA, and they're trading at 17 cents US or 21 cents Canadian. And they are trading with a $30.9 million market cap in US dollars or a $38.6 million market cap in Canadian dollars at $1.36 per pound US or $1.70 per pound CAD. Now, that's really good when we're just looking at price to performance here, or price per pound, I should say, my apologies, because when we look at a lot of these companies, you don't see below $1.50 anymore. You did see a lot of them at about, you know, $1.20, $1.50 or so when we were, like, before SPUT back in, say, August, but we don't see that as much anymore, so when we're comparing to the other companies in today's more relative terms, yes, this price per pound is really good here, but let's move on with the video. Looking at some stock charts here, so on the max, of course, we could see that this isn't really fair. There was obviously some massive dilution here, so it doesn't even show any movement. And now, when we go look instead over here at the 6 month, we can see after it peaked in SPUT, we can see in, or actually it says about here August. I don't read charts, but I don't know, so maybe it peaked a little before SPUT, I'm not sure. But it's definitely pulled back a lot harder than a lot of the other companies have as of late. So that could mean it's a decent buy the dip opportunity, but we'll have to see. So just going over some slides from their presentation. First up, we have just a quick little overview thing here. We have 400,000 hectares of land in Argentina they can go explore, and their project consists of 3 different properties, one of which does have a PEA. That's where we'll be getting the fair value for the company, and that is the Ivana, I'm not sure how to pronounce it property. And these other 2 are still exploration companies, and they have a whole bunch of different exploration properties, though only the one actual developing project. So just kind of going over what their kind of plan is reading through this. Argentina is currently highly dependent on fossil fuel and hydroelectric power, but has an advanced nuclear industry, and that nuclear power industry is now expanding, and there is no domestic uranium production in Argentina, so their idea here seemingly is to supply Argentina's uranium demand so that they no longer have to import uranium. So just going through this, we can see this is their main project here, I believe. So right here we have their main project. So they want to have, you know, they have all the good stuff, like good infrastructure, power, water, railroad. They're only less than a 3-hour drive to a major city, which is good to see, and it seems to be in a low environmental risk area because there's not a whole bunch of rainfall or anything crazy like that per year. And Argentina does seem to, yeah, like they list here, they have a ton of mines and stuff in there, though I'm not sure how politically stable the country is or that kind of thing, because I believe there are some talks they wanted to nationalize their silver mines. I might be mixing them up with another South America country. I don't know. My geography is not the best, but I'm not sure. But in general, Argentina does seem to have a large mining economy, and so that's good. So just going over some of their share structure here, we can see that they have just a ridiculous amount of shares outstanding, especially relative to their market cap. We can see 184 million shares outstanding at only a $50 million market cap, but it's less than that, of course, now. So it is just, that's why you see the percent share. But I'm not a big fan of that shares outstanding amount relative to their market cap. Really bad. Not a fan. But when we also look at it on top of that, we can see a ton of warrants, ton of options. That is just awful. We have over 100 million warrants and options out there with less than 200 million shares outstanding. Like, that is just insane. Similar problem to Arcana here with just awful share structure. And that could maybe be why they pulled back harder. So going over their Ivana project, they are going to be having 22.7 million pounds in the ground with a 2% royalty at a low grade of 370 parts per million, and a initial capex of actually quite low here, only 128 million, with a total capex of only 163 million, so there's actually very little sustaining capex here. But when we then go on to OPEX, also not bad here at only $20.55, and there isn't a time like it's still at PEA, so for the DCF, I will be assuming 2024 construction and 2026 production, since they expect to be under construction for 2 years and to be producing for 13 years. And so just going over some notes that I saw, or that I took, I guess, as we can see that this is supposedly the largest uranium resource in Argentina and is going to be a conventional mine due to it being a shallow deposit, and then they're going to have a tax rate of 38 6%, they're expecting to produce 17.52 million pounds of uranium and 6 million pounds of vanadium. And so this 22.7, that's just uranium, by the way. And so when we then look further, according to their presentation, they had a geological setting similar to, I'm going to be honest, I don't know how to pronounce the country properly, but of course, Kazatomprom from there, and so that's of course a good thing, or presumably is, but we move on to the overview of this project a bit more. Just to also show their vanadium, they also have 11.5 million pounds of vanadium in the ground at a parts per 100 rate of 0.019%. Now, I'm not sure if that's a good or bad grade. If it's anything like uranium, that's of course very low. And they, of course, like I noted earlier, they have a whole bunch of exploration projects and resources, but no technical reports. And they admit they have those listings that they'll say like, oh, this exploration project has about 5 million pounds in the ground, but they aren't compliant with the standard way you would list your mineral resource with NI 43101, which is all the technical reports these companies follow. But let's move on to the DCF here, and we see it's actually really, really good here. Of course, they're not profitable at current uranium price, but at only $59.95 uranium spot price, they are break even with fair value, and this is still using all my conservative numbers, as well as current vanadium pricing. And so when we look at it, at $60 uranium, they are, of course, pretty much fair value once again, but at $80 uranium, we see it go crazy. And so these guys look very, very leveraged to the uranium spot price, and so they look like they have some insane economics here, but similar issue to Arcana, it seems like, Arcana Silver, which I did a video on a few weeks back. Great economics here when it comes to their fair value and things like that, but just an awful share structure that could make it just, you know, you don't even want to bother with it. But of course, that's up for you to decide. You should always do your own research, all that kind of thing. Thanks for watching, and I will see you next time.